Good morning to everybody. We're glad to see you. Hadn't really been a committee meeting up here in a while, so this is kind of getting back in the saddle for everybody. It's got a pretty good turnout for a Thursday. The Joint Study Committee on Property Tax Digest Impact on Education Funding is kind of the result of several years of observation and between the House, particularly the Appropriations Chairman and the Senate Appropriations Chairman, whoever they were at the time, because of the recurring events over the years where we've had school systems discover or bring to us, maybe through their legislators, mistakes that needed to be corrected that had to do with typically the distribution of equalization funding. And in many cases, this had to do with errors in the tax digest. Of course, July 1, the DOE distributes the equalization funding, and just as it does QBE funding, when that's gone, it's gone. And so anything that comes up after that, it has to be some sort of supplemental appropriations issue. And of course, in some years that's a little bit of money, in some years it's a lot of money. It has been several $1 million a few times over the years. And of course, we want to respond to legislators, and they usually bring a lot of information, but it always seems like when we start asking questions about the process of the tax digest as it flows from the county on through the process, ending up at DOE, the questions that we ask a lot of times were answered by, well, we don't do anything except accept it, and we don't do anything but pass it on. We don't do anything except quantify the numbers and distribute the funds. It seemed to be very, very little oversight, frankly, in that process. The last case that got some attention, I believe it had to do with Troup County and the fact that the Kia plant, which apparently is part of the economic development package, was school taxes were abated, which is fairly unusual. Our payment in lieu of taxes situation was created. So that plant should, which is I think $1 billion, so it should not have been included in the tax digest that was presented and went through the process. Well, it was. So when they divided up the equalization money, they lost out by a pretty good amount of money. As I remember, it was $3 or $4 million. I'm not positive about that amount, but it certainly got our attention because that was a lot of money. As we got to asking questions about, well, who's supposed to know about these payments and so forth, and then what would happen ultimately if the property began to come back into the tax digest? Who is responsible for notifying on the digest and DOE that, hey, this property is now paying taxes again, so we need to reduce the amount of equalization? It seemed, the whole process seemed as if it needed some scrutiny. If not scrutiny, it just needed some clarification. As Appropriations Chairman and Chairman England and I've had some discussions about this, what we're sort of looking for is some policy that says when your school system comes to you with a mistake in the tax digest or something that is costing them money, whether it be a mistake that we have to rectify in even QBE but certainly an equalization because it's tied to the tax digest, what is the process for that? And how can we as policymakers and budget writers, how can we use the same policy year by year to determine if the state is in fact, should step up and replace those funds? So, because when you think about it, if you replace one system's funds, you've taken it from some other activity. You've taken it from maybe a worthy activity, maybe you've taken it from mental health or whatever, but if you put dollars into this one activity that maybe was created by a mistake, then you've got to rectify it. So it is important. As I mentioned to someone this morning, I don't know that we're looking for any legislation. What we're looking for, I think, is understand the process, and by doing that, maybe if we can see some policy that we can implement that will help us go forward. And that's all I'm interested in. Very interested and very pleased to be working with Chairman David Knight from the House, and a fellow that I've worked with over the years on different issues, some successful and some not, but we gave it the old college try every time. But he's a really smart guy, and I've enjoyed working with him, and I'll turn it over to him to recognize his members and staff, and then I'll come back and introduce ours.
Thank you, Senator, and I've always wondered what it was like sitting here viewing out, because as many know, this is the rules, the Senate rules meeting room, and it's a nice view. It's not so nice looking back this way. Yeah, it was a great view. I thank you, Senator, and this is a very important issue, as we've talked about before, as you get into the budget issue and trying to solve an issue. And again, I want to reiterate, this is not necessarily about, changing a mechanism or the process, but it's more of making sure that it's working and it's being reported correctly. So with that, I'm going to introduce our House members that are here today. First is Chairman Ed Reinders, Ed, District 152 from Albany, and Chairman Reinders is the chairman of our General Government Appropriations Committee. And next to him is Vice Chair Mike Duggins from District 25, and he is the Vice Chair of our Education Committee. So then I guess we're missing a few House members. I'll make sure it's, if y'all want to, you any comments or?
Thanks for me.
Yeah. I wrote the cleanup equalization bill a couple years ago, so I've been down this road.
Well, we're glad to have our staff with us. Melody Debussy is here, the head of the Senate Budget Office. Rachel, Rachel, formerly known as Rachel Austin, now married, newly married, and has a French-sounding name, Rapierre. I enjoy saying that. Deep South Georgia, we don't get to say that very often. Satin Geary is here with Senate Research. Adam Sweat with the Press Office. Rick Ruskell with the ever-present Legislative Council. And who did I miss, Charlie? Oh, Angela Toohey, who, for all her work, is the only reason we're able to be here today. She's done all the work to get ready. Our senators we have with us this morning, Senator Sims, we're glad to have you. Would you like to say a word? Senator Lindsey Tippins, Chairman of the Education Committee. Good to have you, sir. You didn't lean forward, so I assume you're not speaking. Senator John Wilkinson, Ag Chairman. Glad to have you.
Let's see if you can be that lucky on this next.
Senator Frank Ginn. Again, as every president member has got lots going on, lots of policy issues. So again, any of them remotely related to what we're talking about today.
I'm just glad to see some good economic development, Coach.
There you go.
Senator, I failed to mention, for the House, Jimmy Betts is with our Ways and Means Committee, and I think maybe also research maybe, and then Christine Murdoch from the House Budget Office.
We've got a fairly short agenda today, and the plan that I have, and the plan that Chairman Knight and I have talked about, is not going to have a lot of meetings. We're going to have a meeting and look at the process, and we're going to let staff kind of take what we learn here and develop it a little bit, and maybe come back and let them bring their proposals, and we'll see then where we are, and we may can line this up with one more meeting. But today we're going to listen to a couple of local tax officials to talk about the tax digest and how it gets to the point that they turn it over, and then we'll follow it through the process of the Department of Revenue audits and on the Department of Education, or line over the Department of Education. So our first speaker this morning is Rachel Pruitt, who is a Lumpkin County Tax Commissioner, and she's going to talk about the local tax digest process. Let's see, check that mic. Let's see if that's working.
Test.
There you go. Good morning.
Good morning. Thank you for having me. I am Rachel Pruitt, and I'm from Lumpkin County, and we're in the North Georgia area with a population probably about 35,000. I'm just going to give you a brief synopsis of my duties as tax commissioner and how we prepare the digest to take to the Department of Revenue. Each taxpayer is required to file a return with the tax assessors or with my office, but I've designated that to go to the tax assessor by January 1st of the tax year. They have to April 1st to file the returns and to file for any exemptions that's going to be there. Tax assessors then gives me the digest, which is what the net digest is of all the real and personal property that's located within our county. And they also give us the numbers of the exemptions that are there that everybody has applied for. We then compile those figures together with what we call a consolidation sheet. Those consolidation sheets breaks it down by residential, commercial, different fields of what type of property there is. We also get all the figures that we have, and we give this to the county board of commissioners, the schools. They have that, they provide us with their budgets. We then take our digest, our consolidation sheets, to the Department of Revenue. They are due by August 1st to the Department of Revenue unless you have filed for an extension. And there's other things that gets involved in all of this, but this is just a brief synopsis of how we go about getting a digest to present it. The Department of Revenue goes through all of our qualifications that we have to as far as the little advertisements or anything else. It examines the preliminary digest. They find everything is in order and we've complied with everything strictly by the law, then they will give us an order to collect taxes. Until we have that order from the Department of Revenue, then we cannot collect taxes. So, because we're collecting the state dollars too. So that's just a brief synopsis of the tax commissioner's role, how we come up with the digest, how we prepare the digest and the consolidation sheets to present it to the Department of Revenue for approval.
What it has to do with property, I know that basically you build that digest up. Property that's abated, how does that happen? How does that handle? How do you recognize property that has been abated for?
We have such a piece of property in Lumpkin County. We had an abatement that was done with Polio. It was like a $50 million project. It was going to hire like 60 individuals. With the Development Authority leasing the property to Polio over a 10-year abatement period, part of those taxes are abated in lieu of the lease payment over the 10-year period. After the 10-year period is over, then we are taxing that company fully, because we do have that abatement in Lumpkin County. Tax assessors has that figure that should be put on the digest, and the amount that is getting abated should be treated as an exemption for that abated property. And it should change over the 10 years while we are doing the abatement or doing, because there is a contract that is signed with them how much is supposed to be abated each year. Each one that has an abatement should know exactly how much they're getting exempted. Like the first year, they were exempt. Second year, they'll pay 90%. Third year, 80%. As it winds it down to their fully paying.
So at your level, then that contract, you got that contract, and you're tracking that, and every year you're feeding in another that payment of that piece of property. You're adding that value back to the digest year by year as that abatement subsides. Is that
The tax assessor should be.
tax assessor?
Yes.
Mike,
Yeah, Chairman.
what number are you in?
I don't know if I'm on 2 or 3. My question is, who is really ultimately responsible? Are you responsible as a commissioner, or the assessor responsible for keeping track of the abatements and what should and should not be on the list?
The tax assessors.
The assessors.
The Development Authority presents this to the county commissioners. The county commissioners approve this abatement. The tax assessors are made aware of that abatement issue, and they're ultimately responsible. It's like a little coin that goes around that we have with the tax commissioners. We don't set the value. We don't set the millage rate. All we do is just send the bill.
You have a list of.
Yeah.
I've heard that.
Yeah.
Other questions? Said Tiffany, what? Attorney, get your lie there now, figure out which one you are. You got a lie.
Well, I actually been on, but I don't know.
I'm still up here.
In terms of process, when the development authority lets title to the property,
Yes, sir.
okay,
And then they have a lease.
back to the ultimate user, is that correct?
Correct.
And y'all handle it with bond, y'all handle it with local bond,
Yes, sir.
okay? So you have a 10-year payout?
Yes, sir.
Okay, so the first, are there any taxes paid the first year?
The first year, no.
Okay.
They are still paying, on this particular abatement here, they have the facility. They were building an adjoining facility to that. They are still paying taxes on the first facility that they had. They did, I'm not sure the right word for that. My senator here, Mr. Steve Gooch, who is on the Development Authority, is probably more aware of that than I am.
Okay. If you had a new project, in the first year they don't pay any taxes, so does the school district ultimately stand to lose even what they had before it was developed?
They're not losing for something that was never there.
Well, but they had property values, and the reason I asked the question,
It was owned.
we've had some situations in county that before, and I think it was a 3-year period, they paid no taxes whatsoever on the real estate or the improvement. And so the school district would be losing even the values that they collected on prior to development. So I think that's one concern that the education folks have, is that they're really in a worse position ultimately. They may recapture it down the road, but they're not made whole. And
This particular case, this property was not owned. It was owned by the Development Authority, which would have been a tax exempt property anyway.
okay. So I think one of the concerns, I think what we're looking at is the effect of real estate taxation and how it affects local school districts. And I know when you've got a piece of property, if it goes into a development authority, then the school district loses tax revenue on it altogether. And I know there have been some situations in the past in different scenarios and different formulas. If you go back and look at the study that the Department of Audit did on this, the conclusion they drew is there's no uniformity at all as to how this is happening. And from my standpoint, that's what my concern is that there is some standardization and that school districts aren't put in a worse position at any time than they were when they started. And I think that was the purpose for pilot payments of payment for the taxes. Obviously, there weren't really taxes, but that the school district would not be penalized. And, in that, in my mind, of what we're truly looking for is some type of standardization where the school districts aren't punished, and there is an accounting of how those funds are handled. I know in I've looked at this extensively in the last session, and there's no uniformity even of how the revenue is handled. There's so many players in this Department of Revenue, Department of Education, economic development. And the information is stored in different silos. I'm not sure that there's any one place you can go to see how a project is handled. But I think one thing our committee needs to look at is the revenues that come in. How is it handled on the books of the local board of education or the local school district? The reason I say that Because if it's not handled as a tax revenue, then if they are in the receiving mode from equalization, then they will receive more equalization because it's not counted in wealth per student. Obviously, the leasehold that's transferred in terms of taxes has to be added back in to the formula for calculation of wealth per student. I'm not sure that that's uniformly being done, or that the revenues that are coming in are being shown as school district revenues as taxes. So I'll say this to the committee, this is one aspect I think we really need to drill down on and make sure about the mechanism of how the leasehold interest is transferred to the local leasehold or to the ultimate user. Because when that leasehold interest is transferred, then it becomes private property. It should be taxable and it should be calculated well per student. But also we need to look at the flow of money back to the local school district and see how it's being handled in terms of revenue.
In your situation, in your county, are both school taxes and county taxes abated as well, or just property tax?
Well, I would have to look at exactly how we're doing that, but it would be both of them for the first year. And then the second year, as we collect, then we're collecting for the county and for the school.
And if they equal, there's no difference in those two then?
Only other than what we're collecting for the millage rate.
Right.
But the percentages are the same.
But I mean,
Yes,
the process is the same.
That's correct.
Isn't it true that the abatement of taxes in maybe other counties, they may abate the county taxes, but they may choose not to abate the school taxes? So that is an individual decision per county, I guess you.
I think it's something that is debated, and if you have a contract with a company that is coming in with the development authority as an incentive, maybe to get that business to come into your county, or instead of leaving your county altogether. It's basically, I guess, it's cutting down to what the development authority and that business that's wanting to come into your county works out as a contract. And it could be that way. I think it's left up to the development authority.
I think what I guess I'm saying is that each county and its industrial development authority that would ultimately make a decision as to if they're going to enter into a contract that abates just the county portion or abates the county portion and or a school portion.
That is correct.
So that's I guess we want to make sure that we're clear as we talk about this decision, and the example that was laid out of your county where it's both. Some counties may choose only to do county, or they may do county and the school board.
I would assume that would be correct. I'm only familiar with mine.
We've got a couple of real live economic developers who are actually in the state senate. They're with us this morning.
That's dangerous.
We've asked Senator Gooch to come up and maybe he can talk about it from that angle that Chairman Knight is.
Can we take a little higher elevation approach, if I could? One of the biggest challenges in Georgia, and probably every state right now, is the economy, and that is recruiting jobs and industry to the state. We all probably agree with that, regardless of where you live or whatever. So in rural Georgia, it's very, very difficult to get industry. We have a very small manufacturing base in Lumpkin County. I'm the director of the Development Authority for the community. Frank Ginn just got a job, finally got a job, but he got a job in Franklin County doing the same thing. And one of the best tools we have in economic development is these vehicles that we use for these enticements. And I'm not sure the word abatement is even legal in the Constitution. I don't think we give tax abatements. We do have vehicles, though, that allow us to do payment in lieu of taxes, and so we do it through ownership and lease backs and title, land for title and all that. So in our case in Lumpkin County, the Coyo plant is a ball bearing plant. They build needle bearings, and they were going to expand the plant in Tennessee, and they were looking at what are the incentives from Georgia compared to Tennessee. So they began their negotiating with the state with income tax credits and employment credits, and then they came to the community and said, we're either going to do one of two things. We're either going to expand the plant in Tennessee or expand the plant in Georgia. If we expand the plant in Dahlonega, we're going to continue to produce the needle bearings, but we're going to also start producing a tapered bearing. And what that means to you all is we would hire an additional 60 jobs initially. We would spend $50 million on expanding the current plant. Or we'll take this investment to Tennessee and we may shut down the plant in Dahlonega and move the needle bearing operation to Tennessee as well. So we had a real dilemma. That's one of our biggest employers in Lumpkin County. Now the school system had to be a partner in this, Senator Tippins. We had 250 to 300 people that were working at that plant at the time, facing the opportunity of either expanding their plant and hiring more people back that they had laid off in the 4 or 5 years prior to that because of the recession, or we lose the whole plant and lose everything that the school was collecting as well. So it didn't take the school system but just about 10 minutes to jump on board and agree to it. So every one of these deals are different. Everything's negotiated based on the needs of the community and needs of the company and the prospect. Just about every prospect that I deal with, before the day's over, they say, what can you offer us in incentives? So they know how to work the system. They know how to ask for these credits. They know the state's also aggressive in trying to get them to come to the state. We've offered a lot of incentives here in the capital. So yes, everything's negotiable. City, county, and school taxes are on the table. What we did in Lumpkin County is we took possession of the property, not the plant that was existing. It continued to operate and paid 100% full value of taxes. But all the improvements that were made with that $50 million expansion, we put that in the ownership of it in the title of the Development Authority of Lumpkin County. Therefore, it comes off of the tax rolls while it's being built. The first year was 100% abatement for school, city, and county. The second year was 90% abatement, 80, 70, 60, 50, all the way down to the 10th year where there's zero discount. So on year 11, they're paying 100% taxes on the improvements plus what they were already paying, which I don't know the total value of the plant, but it's in the probably $100 to $200 million range. The land that the new building sits on is part of the abatement, only because we negotiated it that way. We could have held out and said, no, we're not going to give you the abatement on that portion, but it wasn't worth the fight. You know, the juice isn't worth the squeeze, so to speak. So we feel like we had to do it to save the jobs that were there and to bring additional jobs to our community. So it was a no-brainer. And I would tell you that just about every county in rural Georgia would have done that deal twice a day. We need to protect these incentives and these opportunities. And the school board, they were in full agreement with it. The Development Authority has a board of directors that are appointed by the Board of Commissioners. They have a policy to follow. The Board of Commissioners adopts the policy, and we have a threshold. You have to spend at least $2 million, and you have to create at least 50 jobs before the enticements would kick in. So I would say every county has some similar policy. It may be higher, it may be lower, depending on what your needs are in that county. And then when the commissioners get the package from the Development Authority, they approve it, and then it goes to the Tax Assessors Board, who also approves it, and then it gets distributed to the school system and to the city and to the tax commissioner. So there's full transparency on the table. Everybody knows what's going on. There's the intergovernmental agreements, there's contracts. Dan McCrae is our attorney. He's probably one of the best in the state that puts these deals together. And if you need real precise information, he would be the guy I would recommend you turn to.
I don't question at all the need for economic development in easements for people to come in and locate or expand. That's clear. I think the biggest question is having some type of uniformity and procedure on how these transactions are handled. I mean, obviously, we're charged with looking at how it affects local school funding, and it definitely affects local school funding. And whereas in Lumpkin County, that process may include the boards of education, there's really no provision that mandates that, and in the board of education a lot of times is cut out of that decision-making process. But I do think as we look at this, we need to look at the whole realm of the revenues and the abatements. And, you know, I think whatever's in Lumpkin County, if y'all decide that it's good business for Lumpkin County, it's good business for Lumpkin County. I don't think the state ought to dictate that. But as to how those funds are being handled and the uniformity of how it gets, guaranteeing that it gets back into the digest and making sure that when it gets into the digest, those pilot payments are reflected as actual tax revenue and the property is counted in the welfare student. And I'm not sure that's always happened.
Yeah.
Thank you, Mr. Chairman. Thank you so much. And allow me just to wrap my mind around this a little bit. Is there anything that prohibits it from being longer than 10 years or shorter?
I'm not aware of anything, but we have a policy of 10 years.
Okay, so that's a local policy.
That's right.
And we assume that that may not fit the state overall, can change from jurisdiction, from county to county, correct?
I would defer to the counselor behind you, but I think that's correct.
Additionally, when you said that the Economic Development Authority that negotiates these deals are appointed by the county commission, has there ever been any thought, or do you know of any place where the Economic Development Authority was also partially appointed by members of the local school board?
That would fall back to local control. You could create a new charter for your development authority and put that appointment privilege into the code section. I'm sure that may have been done in other areas. I know some counties allow the mayor to be a voting member of the development authority in the county, so I would say yes, that's a possibility.
But again, that would change from county to county.
That's right.
And then just finally, does the Economic Development Authority, do you know of any cases, again, I know you're speaking in one area, I get a little nervous about someone cutting a deal on behalf of someone else when we talk about the transparency issue, and then the school system come in later and say, I wasn't a partner at that because I didn't have a seat at that table, and now it looks like I'm anti-job. How do we handle that kind of situation?
I think it all depends on the will of the community. If you want jobs and you're willing to use these opportunities to get them there, then everybody supports it. Now, your community may not need 50 new jobs, and so it may not be as important to you, so that's where the school board may resist. But in our situation, they're starving for jobs. I'll tell you a few reasons why. Over a third of our community is owned by U.S. National Forest, so a third of your digest is automatically off the books. We also have one of the biggest universities in the state in Dahlonega now, University of North Georgia, who has 6,500 students living on the campus. All of their properties off the books. They're building more dorms almost every year, every other year. Every time they build a new dorm on that piece of property they buy, it comes off the tax rolls. They bought the bank downtown Dahlonega, BB&T sold the 3-story bank building to the college a couple of years ago. They were paying roughly $80,000 a year in ad valorem tax. Now it's zero because it's owned by the university system. So the school board's looking for jobs. They're encouraging us. The superintendent came to my meeting Tuesday and said, what are we doing to get industry here? Let's do what we have to. We're fully supported. They want extra revenues to help fund their school systems. And Mr. Dungeon there was on the school board, so you understand. So they want industry. They want growth. We have a senior tax exemption in Lumpkin County where once you turn 65 years of age, the first $300,000 of assessed value on your home is tax exempt. So that starts digging into the school board's pockets quick. That's $3 million a year that the school board in Lumpkin County no longer gets. So they'd rather give the tax abatement on a short-term basis for a job creator than to have it for someone for a lifetime. So
Goose, I'm going to stop. We're going to kind of get behind here. Let me see if we can focus back in on where we started here, and we'll close with this. And I understand then the abatement process on this project in your county, as the digest is increasing, as the percentage goes up of the property tax that's unabated, you're changing your digest every year to reflect that, and when it goes to the Department of Revenue, it is updated, and when you all send it there, that new digest has that increased property value for that industrial property.
Yes,
Okay.
Mr. Chairman, we meet with the tax assessor every year, and we go over those table of values. So the development authority continues to consult with the tax assessor to make sure those values.
But there is
are
a contract, and that's something that.
That's right.
There is a contract, the tax assessor has that contract.
And he also signed that contract with tax assessor.
Mr. Chairman, I think I agree with you. We need to get back into, because I know we've dived down into the specifics of particular counties, and I'm not sure that we're here to start arguing the specifics of what one county may do or what the policy is of one county. We're trying to look at it from a state perspective. In regards to that one last question,
Yes,
obviously we have real property and then we have personal property.
correct.
We'll make sure that we're clear. It's the real property that has the payment in lieu of, in other words, or the abatement. But any personal property, that is still on the digest, if I'm not correct, or is that part of?
It's not on the digest. I mean, it is on the digest, but it's not taxable. In
So
fact,
the abatement is on
it's on pictures, it's on all pictures and real property. The pictures in a factory are worth more than the building.
So, well, you have personal property versus real property.
Their equipment,
Their equipment, so it is also up under,
it's also included in the abatement.
Thank you, Mr. Chairman. Said the scenario is on, and there's a couple different types of development authorities in Georgia. Said one is a constitutionally created authority. They have more latitude. They can waive the school taxes, and it can be for the 10 years. There's nothing, we hear from one community says 10 years. They could go out 20 years. There's nothing set in stone on it. One of the things that when we look at sometimes in the working of the deal, it may be that there's an exemption on personal property, could be exemption on real property. All of those factors come into play, and they vary with pretty much every deal. One of the things that they're also they're locally created authorities, and there are joint development authorities that involve multiple governments. So when you start looking at them, each one of them has a unique circumstances, and there's benefits to each.
All right. Thank you so much, Ms. Pruitt. We appreciate you being here.
Thank you for your time, thank you for having me.
We'll call Steve Pruitt, Gwinnett County.
No relation.
No relation, that's what everybody asks. He's director, I understand, of the Board of Assessors, is that correct?
I'm the chief appraiser for
Chief
Gwinnett
appraiser,
County,
okay.
for the Gwinnett County Board of Tax Assessors.
Pretty smart guy.
Well, somebody said property taxes, and then somebody said economic development. The two really don't mix very well. Senators, Mr. Representative, those distinguished members in the audience. Let's back up just a little bit. There's a code section in the property tax law that talks about exemptions. And it says governmental owned property. Now, if the board, if the development authority was, as Senator Ginn said, was chartered a particular way, that board is deemed a quasi-governmental entity as an authority. As they own property, it's exempt, plain and simple, from all taxation, county, school, and cities. It's exempt. But there's been several court cases out of the Georgia Supreme Court that says through the incremental payment of a bond period, as they pay their bonds off on an annual basis, we being the Board of Tax Assessors, get to assess the equity in the property. So it all varies. Some are 20-year bonds that we recapture 5% a year. Some are 10-year bonds that we recapture 10% a year. Some are 3 or 5 year personal property production equipment that is terribly hard but on an annual basis, there is a pilot agreement, and that agreement is with the development authority. It says how many jobs are going to be created, how much money is going to be spent, and as long as the company, by virtue of reporting to the development authority, continues to meet those demands, then we are obligated as the Board of Tax Assessors under a policy that we have that says we're going to assess property this way. That the Georgia Supreme Court, not a particular statute, but a Georgia Supreme Court case says we can do this. So it's a single piece of property. Some of it's taxable, some of it's exempt. And how much, it depends on what year in the process you are. Now, a lot of these economic incentives are the company comes in and acquires the piece of property. They build the building. They equip the building to begin their production process, and then turn to the development authority, and all of this is worked out prior to, but turn to the development authority and say, okay, I've spent, $100 million. I want $50 million of it in personal property on a 5-year, and I want to pay the real property over in 10 years. So, the development authority essentially, how it's laid out, essentially gives them the money, buys the property, title comes to the development authority. That makes the property exempt if the development authority has that particular wording in the charter. As they make payments back, we get to tax their equity. If it's first year, 5 year, but the first year, remember, everything occurs in property tax on January 1. So the first January 1, there has not been any bond payments made. So the development authority has 100% ownership. But the next year, there's been payments made. There is an acquisition of equity in the property, and we can assess that equity. Now, it goes on the digest as one piece of property that a certain percent of it is exempt and a certain percent of it is taxable. The exempt amount goes into the exemption section of the digest, and the taxable amount remains in the taxable property for collection of taxes, and just like all other property, those taxes are collected and distributed accordingly. I don't know of any particular instance in this type of agreement where the school can participate or can't participate because the Board of Assessors deems the property to be exempt under the requirement of state law. Now, there can be some legislative changes that may allow the Board of Equalization, Board of Education to be part of that agreement, and by law they don't want to exempt their part or whatever. But basically, we're talking about a communication issue. We have a communication issue, and out of this communication issue, we have some great training opportunities. The communication issue, that directly affects the tax digest, which directly affects the funding mechanism for the local boards of education, there's a disconnect. There's a disconnect. Fortunately, in my county, there's not much of a disconnect. But here we're talking about abating property, taxes on property. I'm not sure that in a lot of jurisdictions, the Board of Education is part of that discussion. And if they can't do anything about it, at least tell them it's coming. Number two, the exemptions. Homestead exemptions, you know, we hear school tax exemptions from 65 to be 30,000 or 100,000 or go away at 65. Those exemptions automatically directly reduce the amount of property taxes collected by the school boards. Right off the top. Those come off the top. The conservation use exemptions, the ag exemptions, those also come right off the top. Those are state exemptions that when a net tax base is determined, those begin at gross minus the exemptions. This is as much as you get to taxes. Now, those counties that have lots of industry versus, you know, more residential, and Gwinnett is much more residential than it is commercial, you know, those exemptions take a big bite out of it.
So you're satisfied at this point in the Gwinnett County, and the way it's set up and the way that you all are approaching it is tracking the return of those properties to tax digest. You said there's not much loose motion, I think you said.
That's correct.
Not much disconnect, you said. You're satisfied with where you are.
And our connection with the Board of Education is very strong. Their cost is the CFO sitting in the audience here.
It does make a difference which type of authority they're preparing.
Yes, sir. It does make a difference what kind of authority, how the authority was chartered, whether or not it is truly a governmental entity, a quasi-governmental entity. And then it begins, you know, just a simple property tax exemption process, but, you know, the courts have allowed us to tax that equity.
If you will, and I want to make sure we're going back to that. I think why we're here is not necessarily the minutia of all the exemptions and here. We're trying to figure out what has happened in the past such that this digest, as it's been turned in to the state, and therefore some of the education, the formulas, the funding mechanisms that are depending on the digest, you know, have been calculated, but yet we come back and there's been an error. I don't know where it is, and I think that's what we're here to look at today, is where has those error or where has that error occurred, and at what part in this process? Not, and again, I want to make sure my understanding, Senator, is that we're talking about the reporting chain. I'm not trying to get into the minutia of each individual county and the exemption, but as we're at in this process, as that digest goes to the state and is put there, what happened along the way such that it did not correctly get reported to the state? And thus, I think our issue is that there's been a time or two, and you may know the detail here better than not, but we've had to come back in and make another special appropriation because it was missed in that process of the original funding or funding formula. So can we get back into that issue, and where do you think that has occurred?
It's communication. As an assessor, I did not understand until just recently the extremely high percentage of reliance of the school board in collection of their operating funds, you know, to be in excess of 95%, you know, that I affected daily in building the digest. They need to be part of the communication process in every county to talk about the abatements, the economic development information that's occurring. They need to be part of the discussion if there's an increase in exemptions on the property tax digest.
Yeah, hold on, let me make sure I'm understanding this. It's not, I think we're going to the reporting. I mean, what should be reported, no matter the debate
now we're out here at the very end, and we're going to talk about a ratio. And the Board of Tax Assessors, their work, this is a measurement of how well the Board of Tax Assessors is doing their job at maintaining fair market value for property tax purposes. In those situations where assessors are not chasing market, increasing values.
Yeah, but I think, aren't we specifically talking about here, and this is where I want to make sure that we're getting back into this issue, is the specifics, the property, the taxes in lieu of, how that property is being put back on the digest. Is it, we're in that process, and I think that's where we've got to focus in on, where has that process going to arrive, or such that in the end, when the digest was turned in, that it was incorrectly, not calculated, or it was not on the digest as it got to the state and was accepted. And again, focusing in on, I don't want to get on the peripheral of should it be or should it not be. We're getting on policy issues. I think what we're trying to do, and Senator, jump in here and make sure I'm explaining this correctly, is looking at the reporting function and making sure that all through the entire step, that it is properly reported. And that's where I want to make sure that we're laser focused on.
The tax commissioner that was here previous to me talked about a digest consolidation sheet that gets submitted to the state. On that digest consolidation sheet, it's essentially just a piece of paper that has all of the cumulative values of all of the properties within the county. It also has all of the cumulative homestead exemptions, full exemptions, and exempt properties. Now, the reporting process is supposed to be that if it is taxable, it appears at the top of the digest. If it is not taxable or it is exempt, it appears at the lower portion of the digest to become the net. If that's not being reported correctly, then yes, there is an issue.
But what is causing the issue of some of these not to be reported correctly?
Training? I don't know. I'm sure, yeah. I can't answer that question.
Thank you, Mr. Chairman. Maybe I can ask a question to clarify that. So there's a detailed list which the assessor, which if I have the Acme Wiley Cody plant, which is a development project, which is half taxed and half not because we're in year 5, it's going to be listed on the detailed assessment report that you list, and it'll show this property is valued with this percentage, and then it gets rolled up into a summary sheet, right, which has half of it would be in the top line in taxable and half would be below.
Correct.
And so that's what the commissioner sends on up the stream. They don't send the details up the stream with which property is which. They only send that summary.
Just a sum.
So that's what's kind of going up the stream. So if that's wrong, then it's either the summary was done incorrectly or the original digest had it done incorrectly. You have to figure out whether that was it. And also to follow up on the communication with the school board would have to look at the detailed list in order to find out which properties were in play as far as which were being moving from taxable to non-taxable and so forth. If they just look at the summary, they're really not going to know what the status is.
That's correct.
Okay, thank you.
From a state perspective, when we look at exempt properties and we're trying to do school funding formulas and stuff, I think about Senator Gooch telling us half of his county is federally owned property, which is exempt. Now, that's something that obviously that he can't change. But that local exemption where they give a $300,000, you're over 65, that's something that's changed locally. Now, when the digest goes to the state and the state approves it, and I've been with Ms. Mills to do that before, said they, okay, from a educational funding side of things, how does that fit into the formula for, okay, well, hey, this is something they did themselves and exempted, and this is something that, hey, just because it was the federal government's property or something along those lines, how does that fit into the education side of the formula? And that may be something that you obviously, as budget chairman, said appropriations chairman, you could answer more so. I'm not sure where that comes into fit, but there's obviously a difference between a self-inflicted exemption, whether that be from a development authority or a local exemption, versus one that's you know, just because of the nature of the property. Because I do think there is a big difference from our perspective on how we do school funding for those folks. I'm not sure who to address that question to, but
Let's move through the process and then some of these things may get answered as we move along. I think we've learned what we need to learn from Gwinnett, and it's obvious that the larger the county, maybe the more focused their process is. And you know, one of the problems I think in rural counties is that school systems are small and don't maybe have the staff to keep an eye on the tax digest. But so we're gonna get into that. But I will recognize Scott if he has something.
Mr. Chairman, thank you. We will be getting, depending on how much time we have, in my presentation, we will answer all the questions. You have a very good point. You are correct. Local exemptions are different as it relates to local fair share and equalization. So in my presentation, Mr. Chairman, I can address this very directly.
Very good.
Mr. Senator, you are correct that if the company comes in and buys a piece of property that was on the tax roll as being taxable and becomes part of an economic development abatement, those taxes go away.
And I agree with everything you say legally about it being a quasi-governmental organization. Whatever time it's transferred to it, it comes off the tax roll and goes back into the school. A lease agreement.
Right, a lease agreement.
You know, and I think there's clearly a difference between property cost, especially from the standpoint by the development authority and those who agreement for a particular deal and the deal is something effective after construction. There's a lot to be said about during construction. At what time is any other tax? But I guess my greatest concern is we have got to have an educated population for these people coming into the job. And I think we want to look at how this affects education as a whole. And I believe the biggest problem, that Scott, you may be able to answer that, or any of you may be able to, is there a central storage facility where we can look at all the economic development deals? Because we're specifically looking at that, we're looking at pilot programs. Is there any repository where we can look at the deal and where they're subject to audit to make sure we don't have a mix up? I mean, I looked at it in appropriations last year, and when people came up and said, you know, we had a mistake in our report, and it wasn't called. You know, there's several steps it's got to go through before it's ever approved by the Department of Revenue, but there was a mistake in there. And there's so many moving parts. You come back 2 years later and say, I need to, you know, I found we made a mistake. And if the money's divvied up on a percentage of dollars available instead of a straight formula, how many dollars you're going to get per student, it affects everybody else in that calculation. And I think this is what we have to look at.
There was an attempt a couple of years ago from the Department of Audits to collect that information on a county by county basis. I don't know the results of it, or
We'll have somebody from audits here in a minute, so we can answer this question. So I think you have an opportunity there.
Just real quick, is there anything that prohibits, thank you, Mr. Chairman, is there anything that prohibits or mandates that sheet that is sent up to be given to the local boards of education or their assignee with X amount of time for review?
not that I'm aware of.
And it's a great question, Chairman, but I want to make sure that I'm understanding our focus, and that's the reporting of. So if we're trying to determine if this process is done by the industrial development authorities in general, and they may be called different things, but at each level, isn't that interaction between the industrial development authority and the tax assessor's office So I keep hearing, and it's a good question, I want to make sure we're going on, how does the school know or be privy to the bonds and what agreements that are here? I think that's what we're here to evaluate, is simply the reporting process of how this is, again, coming from those agreements, which are based on what I'm hearing, bonds and that process that we've heard described here today, that is between the industry or company that's coming in and the industrial development authority that is executing this. And so at that point, the next step should be to the tax assessor's office to make sure that the tax assessor has the appropriate information, contract or bond amortization schedule, whatever that is, that determines as those percentages, like you said, of equity. Every year that they pay off a bond, then that equity portion now becomes, it goes out of that exempt column down there at the bottom, and it is therefore moved to the top where it's now in a taxable situation. And I think that's where we need to make sure that we're coming in here, and am I stating this correctly? That's where the focus is on. So as we start to look at, should the school review it or should somebody else review it? I don't think the school isn't in on the negotiations. They don't know what agreements have been made, and that's where we're getting outside of, I think, what the resolution for the study committee said. It's the reporting. It's the reporting portion of it. It's not the policy that's behind it. It is simply the reporting aspect of this, from the abatement process at the industrial authority all the way up to when the digest is accepted by the Department of Revenue. So
Thank you very much. We're going to call Ellen Mills, Director of Local Government Services, Department of Revenue. Good morning. Handouts, all right. You generate questions.
I'm Ellen Mills, Director of Local Government Services. Prior to being the Director of Local Government Services Division, which is the section of revenue that oversees ad valorem tax, prior to this position, I was the Digest Compliance Manager, so the person that the county actually brought their tax digest to for approval. Department of Revenue duties are general supervision of ad valorem taxation. We train county tax officials, assessors, appraisers, tax commissioners, boards of equalization. We do the centralized assessments of public utilities so that the counties can add that to their property tax digest. And we receive and approve those county tax digests annually. We also then audit the county tax commissioner and tax assessor. We promulgate regulations to support the code sections and the administration of property tax, including regulations on digest submission and classification of property, digest approval. We support and supervise the computer math model or the appraisal system that 130 out of 159 of the counties use. So when they're coming up with their appraisals, our staff is supporting and maintaining and overseeing the way that software handles the valuation of property and the exemption of property. We use the
sales ratio study performed by the Georgia Department of Audits and Accounts to assist in the approval of that digest. The sales ratio study, of course, then measures the quality of the digest, the uniformity, the level of assessment, and the amount of bias in the digest. Each year, we revise the digest submission package, and we hold 2 or 3 training sessions for county assessors and tax commissioners to tell them this is how you have to submit the digest. These are the documents that you have to submit. You don't have a copy of that document, but it's pretty detailed listing of the various documents that have to go into the tax digest. The documents that, and the reason that we amend this yearly is that we watch for the codes, the statutes that change. When forest land conservation use was added, we had to amend the digest submission process so that we could facilitate compliance in that regard. Recently, the appeal provision in the code section changed, so we had to amend the digest submission package so that we could ensure that the counties were being compliant with the appeals provisions. So I've given you this handout, this Property Tax Digest 2014, and if you were to look at page 5.36 in there, this is a checklist for the submission of the tax digest. And each one of these items in this checklist basically has a code reference that goes with it or a regulation that goes with it. And we've talked a lot, or you guys have talked a lot about the consolidated summary reports that revenue receives at digest submission. The first page here is all about those consolidated summary reports, because by regulation and code section, the county has to accurately classify and stratify property. They have to include on the digest the value of that property and exemptions applied to that property. And it's very specific the way in which they have to compile that data so that we all understand it statewide, and so that we can evaluate what's in those summary reports. And then to go on to the next page, the item 2, the millage rate form. That's a form filled out by the governing authority, and we ensure that they're properly rolling back to their local option sales tax and insurance premium funds, and that they're setting their millage rate at an open meeting. The taxpayer brochure, there's a code section for that. We ask them, we want to see your taxpayer brochure because the law requires that they put certain things in that brochure. Now, we talked a little bit about the exempt property digest. When you think of the digest submission, there's actually 2 things. There is a taxable digest and there is an exempt digest. And we've been talking about the property owned by the Development Authority, which is a quasi-governmental entity and is specifically exempt per code section. Everything is taxable unless it is specifically exempt. And so Development Authority owned property would be exempt. At least the lease fee interest that the Development Authority owns would be exempt. However, if they lease that property for a long term, over 5 years, it can create a leasehold interest that can have value and can be taxable. So you would have the lease fee interest on the exempt digest and the leasehold interest on the taxable digest. You would not want to put the full 100% value on the taxable digest, because that's going to overstate the value of the mill, because the exemption is not applied in the equalization. So the exempt lease fee on the exempt digest and the leasehold, the taxable leasehold interest on the taxable digest. Did I say that right? Exempt lease fee and taxable leasehold. So, and we teach assessors this. There's a training class that assessors have to take in order to be certified to be an assessor, which is an exempt property workshop, and we teach them the difference between the leasehold interest and the use of fruct interest when it's less than a leasehold. So that's something that we do stress. But the Development Authority agreements are all very different and they're complicated. And then the classes that we teach to the assessor, we strongly recommend they go to their county attorney and get some help reading those documents and deciding exactly what they have, whether or not they have a leasehold
Let me
interest
just ask
or
you a
not.
question right there. Underneath those numbers then, you don't have any supporting documentation that fleshes out agreements or payment in lieu of tax agreements or any other agreements. Basically, you're looking at totals, and whatever totals they give you, you have no way of, I mean, how would you validate those totals?
So
We were told when we asked the question that, well, we don't really validate it, we basically take what they give us, and the calculations are what we validate.
well, that would be something we could ask for, because we can basically ask for whatever we need to ask for at digest submission, and we tweak that as we need to. That would be something we could ask for the Development Authority agreements associated with their Development Authority leaseholds, but that would be rather complex for our staff to go through as well, because by August 1, the tax commissioner will bring the digest. We're only receiving it. We're not approving it. We're receiving it and looking at the documentation we have and say, this looks to be in order, we'll allow you to collect, here's your order to collect. But the approval of the digest comes a year later after audit has gone through and done the ratio analysis and performed that equalized digest number. So looking at a bunch of leasehold agreements would be, I think we need our attorneys to take a look at it and see what they had. And then, it's up to the assessor to determine that. So, yeah. Well, so I think that you get the gist that every item on this checklist has a reference, a code section reference, or a regulation. And so this exercise is to make sure that the county is complying with the various code sections, primarily the code sections in Chapter 5 of Title 48, which is ad valorem taxation. Some are outside that in 36, and then Chapters 8 of Title 48. But primarily, we're looking to make sure that they're compliant with the code sections. We wait for the sales ratio study immediately after receiving the digest. We issue the order to bill and collect and forward the consolidation sheets, which look like this second page of smaller handout. This is the consolidation sheet for Truth County. And in that consolidation sheet, there was a line item under industrial property that overstated the value of that property, and that was something that was not caught. You don't see that part of it, but this is just basically coding that tells us what kind of property it is. R1 it would be a residential improvement, R3 would be residential lot. So there would have been like an I industrial 3 or I1 code that had been overstated in the value and was later caught by, I think it was caught by audits, and because of a exemption code. And so, then that's how it came that the county asked for the recertification of the digest, because it would have overstated the value of the digest, overstated the mill, but the value of the mill. So then below here, Georgia Department of Audits and Accounts would provide to us a sales ratio analysis. It's usually several months after the August 1 digest submission, and we use that sales ratio analysis, which is at the bottom of this page, along with the digest compliance documents that we received at digest submission, to approve or conditionally approve the digest, and that comes about a year after it's actually submitted. On the next page, I gave you an example of the standard on ratio studies that audits uses, and on the last page there, that's the DOR digest assessment audit, showing that while there was a uniformity issue with the residential class, this digest was accepted and approved, but then later amended due to the error.
So,
If I understand it, said
That has to fall between 30, the sales ratio got to fall between 38 and 42, and if it's outside of that, there's additional assessment that can come about.
Well, the 38 to 42 is actually what we use for public utility assessment. It's actually 36 to 44. So if the county were to fall below 36, then audits would adjust that up to the 40. That
And-
equalized digest up to 40.
Can you give me the math on how this works with, for a school system? You know, if your county's historically, let's just say they're 36.1, said they, or they're, compare that, how that helps on, or hurts on the school side of things to the 43.9.
Well, you know what, that's an interesting thing, and I read that Department of Audit audit on school funding, and it's pretty complicated, so.
Mr. Chairman, if I may, just a quick answer. For the purposes of equalization and the local fair share, we use 100%, which is at the 40. There is information that comes across in the 100%, and that's why it's called the 100% equalized tax digest. For our calculation, we use 100%, which is the 40. Informationally, that report also shows where the county is. So if it's at 38 as compared to 40, it's showing you that the district is probably undertaxing relative to the value that the tax assessors or that the Department of Audit, and that's the next step you'll hear about. But short answer, we use 100%, we use the 40. So whether they're at 42 or they're at 38, that's information. But for our calculation, we're using the Department of Audit's actual 100%, which is 40.
You've actually corrected it.
No, the department, we use the report from the Department of Audits, which has corrected it, and corrected that process. We use the process from the Department of Audit.
From a direct taxation aspect, though, the county would get to tax based on 43 ratio, you know, a higher values times whatever the millage rate is.
Do you have a question?
Yes. So the coding that you use for the example, I was looking on page 14 and 15. So development authority project would be coded as a public property exemption. How would it be
It
coded?
would be, they could choose to use the E1,
Yeah.
totally exempt government public property, or they could use the E9. Many of them will use E9 because they have to
Yeah.
grab those values every year and kind of tweak the difference between
I
the
would
lease fee and the leasehold.
Suggest to solve Senator Tippin's problems that we add a code which is for these development authority projects. That way then, magically, if you add that code, then the Department of Revenue can generate a report for us right away that says these are the digest exemptions that are related to the development authority exemption. We added a code for it. Yeah.
We could do that by doing.
Yeah.
This is an assessment question. During the term of a lease agreement, 10, 20 years, whatever, are the values of the property reassessed during that term, or are they frozen for the term?
Well, the assessor has to value property at its fair market value, and there's a provision that was put in the code, I think, because of a court case a few years ago. It was put in Title 36, and it basically says that the assessor is allowed to do this incremental valuation, you know, because we often see them do this 10, 20, 30, if it's a 10-year lease, they'll just kind of gain equity that way. And so it was actually put in the code section that was allowable, but they still have to prove how that equals fair market value.
Okay, so,
The fair market value of the leasehold interest, the lease fee remains on the exempt digest, which is separate.
but the part which, I mean, you start with the valuation of the entire property, correct? And then whatever percent is exempted because it's still held by the development authority is exempted. But the net fair market valuation can increase over the term. So the 30, if you're at a 1% value can be worth more at the 6th year than it is at the 2nd year. At the 2nd year, you may only be getting 20%, but the value of the 1% is more because the fair market value is improved. Is that correct? So if we had a central reporting of all of these deals where you could get some kind of idea, the only change would be whatever the increase or decrease in fair market value would be over the life of the leasehold.
I think that it still requires fair market value, and I don't know that just simply saying an incremental change on a percentage could actually arrive at fair market value. So I think technically the value of a leasehold is the margin difference between economic rent and actual rent, and then capitalizing that difference is really the value of the leasehold interest. So I think the assessor would have to be careful if all they did was that incremental percentage of the whole. They'd have to be, they would have to follow standard appraisal methodology.
But they've got to determine the value of
They've
the
got
home
to
to start
determine the
with.
value.
And then the percentage applications kicks in as far as what's going to be taxed and what's not.
They do have to come up with the percentage of the whole first.
Okay, I guess, do you grasp what we're about here? What recommendations or what, from a Department of Revenue standpoint, I think what I hear you saying is that y'all don't believe you want to be in the business of being a repository for all of these, that your activity is at a little bit higher level than the fleshing out of all these agreements. But do you have anything else that you think would improve the system or keep these mistakes from happening?
Well, I think,
See, obviously, you see that $1 million right there. I mean, is it anybody's in anybody's interest to say, gee, that's a big jump in the property over 1 year?
right. Well, it's hard to see $1 million in a $1 billion digest on just a summary report. The actual digest is a gigantic document. It's huge. So we rely on these summaries, and we can see a lot in the summaries because we know the code so well and the code sections that go with them. But you can't really see everything. But I like the idea of an exemption code specific to development authority property, and then also training. The
That would
assessors
certainly,
have to know
anyone
how to do
reviewing it from outside would be able to ascertain that quicker. Okay, any other questions? Ms. Mills, thank you so much for being here today. Thank you for your work with the Revenue Department. It sounds like you have a very complicated job. Todd, Haskell. And he's Director of Sales Ratio Division at the Department of Audits and Accounts. We're glad to have you today. As it continues to flow down here. Okay, Ms. Baxter, go right ahead. Thank you, sir.
If y'all agree, well, I thought just in a couple of minutes I could go through how the Equalized Digest has reacted during this recession and how some of the tax digests have been submitted at the county level could impact school funding. And it's just the first few pages before I actually start going through our process, or if you read, I'll jump right into our process.
I think it'd be interesting to get some information on recent developments during, as you said, you started. I think that would be very interesting.
The very first page is the Equalized Digest from 1970 forward, and it's pretty interesting to me when the Equalized Digest started on a trend
It seemed like it could not be sustained in the mid-90s, how it peaked in 2008, just how far the values increased, and how we have declined down through the recession back down to about 2006 levels. I put a little red arrow on there. A common question that's usually asked of me is, what do I think is going to happen with Equalizer Digest next year? And I think it's just going to be a relatively modest increase next year, even though we hear a lot of reports in the media about how fast residential properties are appreciating around Metro Atlanta and things like that. And that's why I just put a quick page 2 on there showing the results from our study this year of which counties actually had any trending in the residential value going up. And in and around the metro area, we were very close to about an 18% increase in the residential properties. But you can see it's still very localized around the metro area. The next 2 pages I thought would be of interest because these are the actual appraisals of the real property only, not the personal property, not the public utilities or the motor vehicles or anything like that, just the real property appraisals at the county level and how much they were changing. And I think most of the people who look at these are surprised that the whole state wasn't changing dramatically, that it was really as local as it was at these levels. And the other thing, when I color-coded it in like 5% increments like I did, I think it shows how spotty the recovery is going to be, because the recovery is likely to follow these declines in values. So the counties, obviously, in the hotter colors, the pinks and reds and oranges and all, their school systems, especially if they were around a 20 mil rate, would have tremendous impact as their value came off of the digest. Now, I thought that would just give a kind of a background going into the process, because if y'all have as many people contact you as they do about me about these issues, it helps to know that the state is very different in how it's reacting to the recession as far as the real estate values and the equalized digest. I tried timelines and a number of different things to best explain what we do, because there's so much overlap and so many moving parts in the ratio study. And I thought just starting top center with receiving the digest information from the Department of Revenue, and even though there's a lot of overlap, the digest that we receive from the Department of Revenue is not all we need from them. The digest, we certainly get a separation of taxable and exempt properties, which is absolutely critical to the way our formula works. We also get the current use exemptions, which we take off. We get a separate report from the Department of Revenue on the tax allocation districts, which we remove. But all the other things that we're talking about here today, where a county, like in the example, I believe the one I know you're talking about, a very large example, where there was a misclassification of property where it was submitted into the digest as taxable property, and that value is offset as a local exemption. We do not deal with local exemptions through the equalized digest process. If that's going to happen, it happens further down the line.
So, to make sure, the error that, or one of the errors that specifically got us here was what you just said. In other words, the exemption was a local exemption versus another line. So you didn't review that.
It was reported as a local exemption. What we do, being the Department of Audits, if something comes in and it's numerical, we tend to take a look at it, and we resubmit all the information we get from the Department of Revenue into a form, make sure the numbers calculate and match what the Department of Revenue gives us, and they did. We compare one digest to a previous digest just because we can. And we discovered in this particular county that that large increase in the industrial property seemed out of ordinary for what we would have expected. So we contacted the tax assessor's office. We asked them, is this really what you want to do? Because this is the way it was submitted. And they said, yes, it is. So we contact them and ask them if we see something like that. But you can imagine a lot of these agreements are not going to be so large that in a summary sheet that they will show up. This will just happen to be like that. We do the same thing when we see tax parcel counts that don't add up. A lot of times, some of the counties will submit a digest to us in this process, and they will forget that they don't have the standard system that Ms. Mills was talking about, that the state administers, that they'll have locally developed reporting systems, and they will report it, and they won't give us all the information. We'll just say, you should not have lost 30 or 40 or 50,000 tax parcels. You know, you need to resubmit. So we do a number of comparisons. It's not like it's a requirement with our section to do that. It's just that we do that because we can. And in this particular instance, we did ask if they had made an error, and they said no, that was the way they wanted to submit it. And more than a year, I mean, well more than a year, it passed, and the consequences of that error in the digest became evident with the equalization process, and they contacted me. It wasn't so much that I discovered it at that late point, was they contacted me and said that they're getting killed because of this. What should they do? And we will not change anything like that without a corrected digest from the Department of Revenue because of all the legal reporting requirements and advertising and all those sorts of things. So we suggest that they go back to the Department of Revenue and resubmit. Then at that point, we won't make any decisions outside of what our code section calls for on a case-by-case basis on situations like this. It all goes through the Attorney General's office.
How many years is that?
So that was 10 and 11, something like that.
What time, what time of the calendar year?
Oh, they,
So they turn it in August, it starts there, then you get it when, would you just?
it went all the way through the next digest submission and into the legislative session, so, what, maybe a year and a half later?
It's $1 billion mistake.
Yes.
Yeah.
I guess I was trying to, your question occurred before the Department of Education distributed the equalization.
It occurred as soon as we got the digest from the Department of Revenue, a year and a half earlier.
So you're not tracking nor looking at or paying, I mean, any sort of abatement schedule, that's just not something that you're plugged in with.
No, so the only time that I know of that audits has gotten involved in that was the request for the performance audits, which was a couple of years ago now. And they, I believe they did survey all the counties, and I'm not real sure they were excited about the understanding that a lot of counties had, which may be the situation here too. It may be that this county thought that even though they put it on as taxable property, they had an exemption offset, so everything was going to be fine. Local exemptions are not considered at our stage of the process.
All right.
Anyways, once we get everything we need from the Department of Revenue, understanding that we don't get all this at one time, it comes in over time and everything overlaps. We actually go to the counties specifically and get their tax digest information instead of making it go through the Department of Revenue. They're just massive files, so we will get them directly from the counties. We get directly from the clerk's authority all the real estate transfer forms. We get those on a weekly basis, and those are matched against the tax digest as part of our study process to compare how well they're doing it. And once we have all that information and all the real estate transfer information for the time period that we're going to do our study, then we do what we're going to do. And one of the important parts about what we do is while we're talking about the equalized digest at this point, local performance measures are necessarily determined as part of developing the equalized digest, and those local performance measures are what the Department of Revenue needs for assisting them with approving and authorizing billing, and also for complying with the federal component of it, where we're establishing the correct assessment level for, now it's over $37 billion of public utility funds, and that's tied to our study.
So the list of reports that you all make to different agencies, including local tax commissioner, local board of education, what's the timing of those reports? Do they occur as you go through the process? Are they all at one time?
There are two stages. One, when the preliminary study comes out, We will send a group of those out for them to review, and then we will send out another batch of reports as the final in November 15th.
How many years is that?
The preliminary, we would like for it to come out anywhere from mid-June to early July. That starts an appeal period. When the
Pretty late, even if they saw something there, that it was pretty late in the process.
Well, yeah, actually, there's a stage before that I put on here, is after we do our thing with the information and we have our basic idea of what the issues are, we will go to the tax assessor's office and give them the information and talk to them and try to find out what our early visions are of these sales, of these appraisals, or the issues in your county, the trending, or whatever it needs to be. We will have that discussion with them before we even send out the preliminary study. And one of the reasons for doing that is they have more information than we do because of the property owners coming in all the time. They will learn more about relationships and affiliations with businesses and things of that nature. They will also know whether certain areas of their community are in a different stress level than everywhere else. As far as us trying to get the best possible set of samples that we can get to do our study, we want it to be as representative of what's going on in that county as possible. And once we have gotten through that process, then we go to the preliminary study. And at that stage, the tax assessor's office cannot appeal. They do not have any money in it at this point. It would be the governing authorities and the school systems that have the authority to appeal. The reality is most of them will go back to the assessor's offices and say, you know, this is really going to hurt. Is there anything we can do, or do you think that it's incorrect? So the tax assessors are not completely out of it, but they don't by themselves have the authority to appeal it. So we try to keep everybody as informed as we possibly can. And once we get through the appeal period, then we have an arbitration period. Arbitrations are very uncommon. By the time we get through an appeal period, with audits being as independent as we are, we're only after one thing, which is the right answer. And invariably, we are so close to it, if we don't already have it by then, arbitrations are extremely uncommon. We do have 2 arbitrations this year, and they happen to be the 2 counties that dropped their tax digest more than any other counties in the state. And so we will have a discussion this year as to whether or not they overdid it or not. That will be over with November 10th, and we will have the 100% digest to the State Board of Education by our statutory deadline of November 15th.
You mentioned about 30 or 40,000 parcels. Who gives you that information and let that off the assessors?
What we do is we compare the parcel counts from the consolidation sheets that were provided to us, the digests that were given to us, and we go back and compare that to the prior year digest and prior year consolidation sheets. And if we see anything that doesn't feel right, we will investigate it.
Now submitted to you by who?
The digest we get directly from the tax assessor's office. The consolidation sheets we get after they have been approved by the Department of Revenue.
And finally, if it doesn't just look right, if you send a letter saying this doesn't look right to us, do you CC the county commission or the economic development authority or anybody with the school system to let them know that you spot something that doesn't look right, well maybe they can do a little budget in that?
No, sir. It's my understanding we can't even compel them to give us the information that we want. And that is one of the hurdles when we have counties that have failed to even give us a digest. We've had, in almost 7 years that I've been here, we've had 2 counties that failed 2 years in a row to submit a digest, and one that's failed either 4 or 5 years in a continuous effort to submit a digest, which puts us in a position of having to estimate based on these very suspect data to start with, and we understand probably as much as anybody. I mean, it may be that Mr. Austinson and the Department of Education has a better understanding of this, but we see the impact that can have on everybody because, as the performance audit people explained it to me after their review, it's almost like shuffling a deck. It doesn't take but 1 or 2 counties and not really a whole lot of money to re-rank the counties from a funding standpoint. So we're fighting so hard to get that correct, and we don't have a digest submitted to us at all, and we're having to do it with estimated numbers. It's hard to work with, and even from the standpoint like right now, we don't have 19 digests, I believe is the number right now, and we really need to be getting the last of the last digest. But the counties, depending on which 19 those are, you can imagine what it does to us. If those 19 counties, if several of them tend to be metro counties with, tens of thousands of transactions that we have to deal with, it can put us at a disadvantage as far as our timing as we move forward with it. That many counties in a more rural setting where you don't have very many transactions is not a problem to catch up. But the practice that we've had in place, and like I say, we don't do anything without consultation on these things, is anything that we can get correct, even now, for the 2014 tax digest we're working on, if we end up getting, as what happened in one of the instances I'm talking about with one of these counties, if we don't get their digest until this time next year, it still is to everybody's advantage for me to turn everybody in my office loose, work on that county, and try to get some information before November 15th so that the ranking of the counties is done on the best information available. But it should have happened a year or more earlier. And so it causes just a kind of a domino effect in the process. And it's the same with appeals. When we go through them, you would like to think that appeals for us are similar to like at the county level where you're dealing with one taxpayer or something like that, and it only means one tax bill. If we make an error in our appeal period, we could re-rank that specific county over one or several other counties, and they don't even know that the appeals are going on, and we can change their ranking. Yes, sir.
Since we all know there's some direct therapy links to quality in the heart, we cut off the funding until they got the information, then would that make a difference?
I think so.
It could be a violation of the Constitution because you're not providing that adequate education.
They're not providing adequate information.
I can't say you said this, but I've had this conversation talking with, some of the people we deal with all the time over the AG's office, and they just kind of tongue in cheek said, well, just tell them if they don't provide your digest, you're going to combine them with an adjoining county. But it seems, it would be nice to be able to compel it, but I don't know that we want to get in the business of that. The Department of Revenue is so good at helping us, and I can't overstress how well the relationship exists between us and the Department of Revenue. Not that we all get along like everybody does, but it works so well. When we need something, they will get it for us immediately. When they need something, we will produce it for them. And in a situation like that, like the counties that have not turned in digests like they should, when the 3-year cycle rolls around for them to be doing their 3-year extended review to decide whether they are going to be in compliance and whether their digest should be approved or not, if we have gotten some information well after the fact, I will drop back, do the process over again, and I will redo that years later if I have to, and give them some statistics that they can count on to know whether, if they're approving a digest that the county deserves it.
Without divulging those counties by name,
I don't mind.
what in your estimation, because again, we're looking at, I think this is becoming clear as some of us are familiar at different levels with this, but your work is where this comes in with the 5 mil share, the equalization.
Yes.
Okay? So the counties that are perpetually late, what is the problem? I mean, and I know it may be rural, metropolitan, or it may be specific, but I'm talking about the ones that are time and time again late. What is the problem?
I would say that probably Ellen would have a better answer as to the why. They don't get it in since they accept them and go through the process. The ones that tend to miss and not produce a digest in a specific year, it always seems tied to a complete countywide revow that maybe had not been done for years and caused so much grief that they want to sit back and look at it, or they have so many appeals sitting out there that they can't even really produce a number that would be good to set a middle rate on, because they have no idea how much value is going to be lost in the appeal process. The more up-to-date counties keep their data, obviously the much less likely this to happen.
I am familiar with that scenario. Thank you.
Any other questions? Thanks very much. Appreciate you.
the Department of Education as Superintendent of Finance and Business Operations. Vaguely familiar staff already. We usually dock departments that steal our ambulance the way we usually dock them about $100,000 the next budget. I think we forgot to dock them. I'm glad you're here today. We only have good ones, so if they took them, they were good.
Mr. Chairman, thank you, and members of the committee, thank you for the opportunity to present. I would like to introduce John Cooper, who is now from the budget offices. It says we are, that's the way it is. Sorry about that. I was hoping it was OPB and they weren't here. We usually take them from OPB, but that's because we really want the qualified staff, and we appreciate all that you do to build them up, and it really helps to.
We might contest that a little bit. We think you're at the top of the chart.
Excuse me, Mr. Chairman, in the interest of time, I do have a presentation which is on the screen, but I'm going to move through pretty quickly. I don't have it. So whoever's controlling this, you can just kind of follow through. The pages are numbered. I don't want to be insulting by telling you the high level, because a lot of this is high level, but as you see, this first section will lead to the questions that have been asked. I'm going to move very quickly, and then in the interest of time, please ask me questions. But I
hopefully what you can do is, I think, is you've watched the whole meeting. Hopefully you can help us narrow down on how we can make the process better. I think at this point, by helping us complete the circle, but I hope that you're helping us. I hope you're thinking along the lines of what can you offer to us as improvements or changes that can be made to help keep this from happening, or at least give us some policy to follow.
Yes, Mr. Chairman, so I'll do that. Obviously, we've talked about tax exemptions. Typically, they reduce taxes. The point of this first slide that I think is relevant is that in Georgia, and you'll see the next two slides, there are both local and state exemptions. The exemptions for the K-12 budget, of course, that's what I'm focused on, affect local fair share, which is part of the QBE calculation. So we calculate the cost of education, if you will, in QBE, and then we, K-12 the state, we subtract the value of 5 mills that's versus the local 5 share, and then the state sends out in QBE dollars the balance. So local fair share does affect the amount of money that a school district would receive from the state in QBE as it relates to the value of the tax digest, because it's 5 mills. So if the tax digest is changed in value because of exemptions, then then the local fair share, or the amount that we would net out of what we send them, is affected. I do want to make this point. As it relates to K-12 funding, local exemptions, as you heard from Todd Pascal, local exemptions are not considered. Now, I'll tell you the timing of how we get the report, but we get the report from the Department of Audit and Accounts. So those local exemptions, they're not subtracted. I'll get into that in a little more detail, but here's the point that I think is important for communication and what we've heard. Anecdotally, and also as a result of the audit that was done by the Department of Accounts, we have seen and know that this process, both of pilot and the exemptions, is not often well communicated with the school district. So I'm not suggesting anything about tax policy. Please put that aside. But I don't know if it's a policy recommendation or just a recommendation, what we do here is that it would be really helpful if the schools, whether it's the CFOs or whomever, if the school board could be included in the planning. For example, when a district is about ready to provide a local exemption, it is not going to be factored into equalization or QBE, which is a way of saying there is going to be a dollar cost to any local exemption, pilot being the exception, that we think should be understood by the community. Now, that's not to say it would change the decision, but it is to say we're not certain that the dollar impact of the loss of equalization funding and or QBE funding because of the local fair share is known, because the value, the local exemption will be subtracted from the tax revenue locally, but the value of that property and the notional, if you will, revenue will not be subtracted from local fair share and will not be subtracted from equalization. So a local exemption outside of pilot has a specific reduction, it has an impact. Cash flow wise, because the revenue is not coming to the school board or the county, whatever the tax may be, but also it's doubly so bad because we consider that revenue to have been collected. So local exemptions have a cost. There's a dollar figure which could be provided. It would have to be estimated, but it could be provided. So we would like to see, and I hear a lot from school districts that sometimes they don't think whomever is providing the exemption always understands the implication. They certainly understand the loss of revenue. They know how much money the exemption is going to cost, or at least they've estimated it. But oftentimes, they're probably not familiar with how much money they're going to not receive from the state, either in terms of more QBE or if they receive it in terms of equalization, because we don't include that exemption in an adjustment to their tax budget.
So again, you have two mics there, I don't know which one.
I'm gonna get both of them. Thank you, Mr. Chairman. One of the things,
And I'll listen with both ears.
one of the things with a lot of industrial authorities, and it varies from policy to policy, from county to county, usually the exemptions that they're given for these projects that are coming in, like Senator Gooch had alluded to, they're typically, that investment's not there when they give that exemption. So therefore, it's a growth to the county. There are some examples where some exemptions are given on existing facilities and existing tax base in the county, but those are rare. And I just want to make sure that most people understand, in the room, that your industrial authorities across the state typically are talking about future growth in the tax digest, not retroactive growth. So I don't want to hurt my friends with the industrial authorities across the state.
Yes, Senator, and I would agree. And again, I want to point out, we'll come to the end. Pilot and the arrangements that we're talking about with abatement and the leasehold interest, et cetera, that is factored into equalization. That is actually part of the calculation. So that it is technically, I would call it, just generically speaking, a local exemption. It's a local decision made locally. However, those numbers do actually impact the tax digest. So my point was, I do understand that pilot in Fruit County was, I think, the precursor to this discussion, but it's actually much broader, all of the exemptions. So my first point was simply this communication issue where we would like to see, ensure, and some do, that the school boards view, that is the cost both of the lost revenue, but also the implications for local fair share and equalization as well, that they're considered. But as it relates to pilot, it is actually part of the calculation. So there are adjustments for, and when I say pilot, I'm talking about the leasehold arrangement, et cetera. So there's revenue and also. So that is actually included. I have heard, again, just jumping ahead, but I have heard as it relates to communication, again, anecdotally, and I also saw reference to it in the Department of Audit review of this question, the inconsistency in how these things are dealt with. So again, not to point at any particular district, I think some are probably communicating well with their school board, and some might not be. So, if it's pilot, for example, I think it would be useful for the school boards to know what's coming. And I would really jump ahead to that question of how can the school boards, because when we first looked at Fruit County and pilot, we were looking at I was looking at how can we help solve this problem so that we don't have these reporting errors or whatever they might be. Ultimately, what we learned is that it's two agencies separated from us. That is, it's the Department of Revenue receiving information from the local tax commissioners, which are then adjusted by the Department of Audit. So we're so far from that process, it's difficult, but the local school boards are actually in a place where we think could provide some communication, and that is that short window of time that Mr. Pascal mentioned, which is between July and November when we receive the reports. There's a preliminary report that comes out in July. The final is in November. Very short time frame, but in theory, if the school boards knew about the arrangements and knew clearly what the arrangements were, they could probably add more value in that short time frame between the initial report coming out in July and the final report that we use for equalization local fair share calculation in November. So again, just school boards knowing what's coming would be helpful. When we talk to school boards, oftentimes they say, well, or sometimes they say, we just don't know. We can't really give a lot of value, or we can't really add a lot of value in that analysis because we don't know what the tax digest is, because a lot of this is through the authority, and as you've heard, structurally there are all kinds of different arrangements, so it's hard for them to know.
So you're actually running a year behind.
3 years, and
You're actually dividing up equalization funds based on data that's not of the current year, but some.
That is correct, Mr. Chairman. It's actually 2 fiscal
There
years
is
behind
time
and
there.
3 calendar
There's
years.
time to correct error. I guess the thing that hit me when you said that is there's time to correct that error before you ever got to the point in July of that year to distribute the equalization funds, it seems to me.
Yes, I would suggest, well, again, we received the reports, we being Department of Education, I hate to sound like a bureaucrat, but we received the preliminary in July. I did hear from Mr. Pascal, and we do know that there's a lot of discussion that goes on between the Department of Audits and the Department of Revenue and the local tax commissioners. I would suggest it would be helpful if our school boards could be part of that process as well. So at the last instance, I know that we have the initial report to provide the local districts, we down to the school systems, in July. So between July and November, the school districts would be involved. But I would agree with you, Mr. Chairman, it would be very helpful if the school boards might be part of those conversations earlier on, even before that July report comes from the Department of Audits and Accounts, because as you've heard, once that report comes out from the Department of Audits and Accounts, it becomes much more difficult to make corrections. So I think we're all agreeing and saying that the school boards could add more value over the whole chain of information as it flows through the various agencies if they had a better understanding of what the arrangements are. And as you heard, they're all very different. And just as a point, when we first were trying to figure out what is this pilot issue, what are they talking about with group, what we found was, even for the Department of Revenue, it was sometimes difficult because these arrangements are very different. And structurally they're very different. So it's hard for even the Department of Revenue, I think, in the absence of collecting them up and having their own attorney review of these arrangements, to understand what they should look like. So that the criticism I'm making is not of the policy, it's only of the communication where it's not well understood by the department, by the local departments of education as to what might be coming. And therefore, I don't think they're able to add as much value in getting those dodges correct before they come in from the Department of Revenue to the Department of Audits, and then finally from the Department of Audits to the Department of Education in July initially, and the final is in November, and that's statutory. So we're using that November reporting finality. We always ask that the school districts really take a look at that initial audit, that initial tax digest. However, Mr. Chairman, as you point out, it's kind of late, and it would be nice if there was more, I think it would be helpful if there would be more interface with the local districts. And as a practical matter, that is difficult, we hear anecdotally, for some of the districts because they're not really in the know about what the arrangement is, and a lot of it is because they're structurally, legally difficult, and they're somewhat opaque from that perspective. But maybe we, the Department of Education, could work with maybe the Department of Revenue, someone to help come up with a framework for general analysis so the school districts will be able to add some value in that discussion again. Not whether they should do it, but only what are the implications and making sure that the reporting is done correctly. So if I may, so slide number 2 is just talking about local exemptions. Again, there's a local homestead exemption some districts have, which is not part of, which we do not factor into our calculation. There's also a state homestead exemption, which does factor into it. So in page 1, we're just giving examples of local exemptions. This list would go on as long as they have the local authorities have the ability to provide exemptions. The key point is local exemptions outside of pilot do not impact equalization or local fair share. We don't say you gave an exemption, a local exemption, therefore we're going to lower the value of the tax digest, and therefore your local fair share contribution will go down or your equalization will go up. We do not do that for local exemptions. For state exemptions, as you heard, we do. And when I say we, I mean the state. I'm really talking about the Department of Audit and Accounts, because what they send to us, as you'll see later, is a report that shows the property which has. So they show us the digest, and then we subtract it. Sorry. The Department of Revenue does send us the exemption. So on page 4, I'm sorry I'm jumping ahead, but I'm cognizant of the time. On page 4, you will see, and this is the point, that the Department of Audits and Accounts, Mr. Pascal's office, they send us a copy of the tax digest. The tax digest that we use is the 100% adjusted tax digest, which is not the same digest that is used locally. So as you heard, Mr. Pascal and the Department of Audits and Accounts receives digest information locally and also from the Department of Revenue and summary sheets, et cetera, et cetera. And the Department of Audits and Accounts puts all that together with their own study, makes an adjustment, and sends it to us. and that's the 100% equalized digest that we use officially statutorily for equalization and local fair share, which is a way of saying we have a known report. It comes from the Department of Audits and Accounts. Certainly a lot goes into it, but as it relates to equalization and local fair share statutorily, we don't have discretion. We use what the Department of Audits and Accounts provides. If there are adjustments, those adjustments have to be provided to us through the Department of Audits and Accounts, and it has happened, and we're certainly open to that, but it is a process, and it's a statutory process. Page 5, I think, is helpful. It might be a little bit busy because we're moving quickly, but I have to say this. Mr. Chairman, as you pointed out, if you look at the left-hand side, the top blue box, it's showing you that the digest for 14, the amount that we use for the fiscal year 15 allotment sheet for QBE and also equalization was dependent on the November 2013 digest, tax digest report. It's the digest report is 2012, but that was fiscal year 13 or 14? This is fiscal year 14. So calendar year, the digest itself is from 2012. Let's just talk calendar. The digest itself is from 2012. Right, reported to us in November of 2013, which is our fiscal year 14. So the digest is older. The actual digest that was used for the calculation goes back to 2012. So there's a lag period in what we're funding. Again, yes, that's an opportunity perhaps to get more eyes on the numbers, but it's a long process of review. And then in many respects that is important. But just as an aside, the thing that is relevant is oftentimes as we see equalization, it changes and people will see the fiscal year 15 equalization, for example, keeps going down. So how can it be going down when in fact tax digests are going up? And we have to remind people, we're looking at a tax digest from 2 years ago. So the equalization payments that were going up and all of the volatility that was occurring because of that fall, mainly in Metro, et cetera, that still impacts our equalization. It was impacting it later than most people thought because the digest fell years ago. Why are you still impacting equalization? The answer is because we're using a digest from 2 years ago. So that's a bit of an aside. Mr. Chairman, then the other point is, you look at that middle box that is blue, and this is in any given year, so it doesn't really matter. The point is, we get an initial report from the Department of Audits and Accounts in July. And this was the point we were making. This is when we received this initial report from the Department of Audits and Accounts, we send that out. Of course, the school districts get it as well. And this is where the school districts have an opportunity to take a look at the digest and see how much it might be impacting their revenue and see if it's consistent with what they thought. And hopefully it's consistent with their projections because their budget is predicated on it. But nonetheless, this is an opportunity for school districts to get involved, which is starting with that official report in July. And of course, the final version will come to us in November. So if there are any changes that are made, then they're made by the Department of Audits and Accounts in that period. It's not a long period. And frankly speaking, oftentimes the school districts can have a difficult time in adding value in that review process because they don't always understand all of the exemptions that have been provided, particularly through pilot, in that it's a more opaque. It's a very legalistic arrangement that's hard to understand sometimes for local school systems that don't have all the documentation. Again, local fair share, what is it? Local fair share, as I mentioned, is now just getting into showing you how these things affect local fair share and equalization. Local fair share, as I said, is an amount that we deduct from the QBE amount that is earned by a district before we send the state QBE dollars. So theoretically, there's a QBE amount, QBE earnings. Then there's the question of how much we subtract, which is the local 5 mil share that the districts are required to put in, and then the state sends balance. The higher the local fair share, the less the state sends because we're sending the state number. So things that reduce the digest reduce the value of 5 mils and therefore increase the amount of state funding. So I'm also focused on how our numbers come out with equalization. What do we do with the local fair share? calculation, here's what we were talking about. You can see the 100% equalized adjusted property tax digest. That's what Mr. Pastor was talking about. That final November report, unless it's been officially adjusted, but statutorily we have to receive it by November. We take that, we use it at the 40% level, and we subtract, Department of Education subtract the state exemptions. And the state exemptions are reported to us from the Department of Revenue. So Department of Audits is giving us that adjusted tax digest. By November, we're taking the 40% and we are subtracting the exemptions. And then of course, at the bottom you can see whatever that is, we're multiplying that by 5 mils, and that gives us the dollar value that we require the school district to put into, if you will, the QDE funding, because we net that out of what we send them as state dollars from QDE. Equalization, as many of you know, equalization is intended to reduce inequities in property wealth. Equalization is, I won't get into too much detail because I'm assuming I think everybody knows what it is, but essentially, we look at quickly speaking, we look at the statewide average value of a mill per kid, and we look at each district's value of a mill per weighted student. And if the district is below that calculated average, then we will equalize them, assuming they have actually taxed themselves. Okay? And we're going to get to that in a minute because that's important. That's how actually the exemption comes into the equalization formula. So with equalization, the question is, what is the total value of the digest? I'm sorry, yes, the total value of the state digest, and we're going to calculate an average. Now, just as a sub-point here, but it is actually potentially policy. This is one of the areas where not having the information from a district would impact the calculation for everybody. We have to calculate a statewide average. Each district is compared to that statewide average. If we don't have the correct information, or if we don't have information from a school district, the statewide average calculation is technically not correct, unless absolutely nothing changed. Because what we do as a practical matter to solve for that problem is we use the prior year tax digest without adjustment. That might be good, it might be bad. Right? But that has impact on everybody because it's the calculation of the statewide average. Again, for equalization, when we look at the values, the tax digest property wealth value, we're subtracting the same exemptions that we did for local fair share. So I didn't repeat them here, but they're the same exemptions. Small point agriculture is at a slightly different rate. One of them's at this one's at 100%. For local fair share, the agriculture exemption is at 40%. Not sure why, but that's statutory. All right, here's the equalization calculation on slide page 9. And I think this is important. If one is looking at pilot or payment in lieu of taxes, there are two aspects of a pilot program, and I'm using that term generically, and I'm referring to that whole leasehold arrangement, et cetera. There are two ways that a pilot arrangement impacts equalization. The first is what I'd call the numerator, the tax revenue. And I'm going to get to that in a moment. We haven't talked about it. It's something to understand, but it has nothing to do with the exemption, except that were it not for the exemption, you wouldn't have a pilot arrangement. But the pilot arrangement does bring revenue back in. You all have mentioned it, so we thought we would point it out. So the numerator is tax revenue. The denominator is the 40% adjusted tax digest. With the pilot arrangement, it is technically a local exemption. However, it is included in the formula. So the value of the property in a pilot arrangement has been subtracted from the digest. You'll see later, if we don't have time to get into it, I'll just say it's subtracted before we get the digest. So pilot and homestead exemption actually are already subtracted out. So it is subtracted out. We didn't subtract it out. We take the others from the Department of Revenue. Pilot and homestead revenue, or pilot and homestead values are not in the tax digest when we get them. So they're not in there. So the denominator of the calculation is lower. If the denominator is lower, the answer, of course, is higher. So the effective mills is what we use in QDE to say your local effort is what you've actually taxed yourselves, and we're going to equalize for those effective mills the difference between how much you've actually raised, which is the effective mill, and the statewide average. When we do equalization, we do not, how would we know how many mills to equalize? Well, first of all, we don't equalize the first 5 because that goes to local fair share. So theoretically, if you have 20 mills, and that's the cap on how much the millage rate, you have 20 minus 5 local fair shares. So the highest number of mills that we would equalize would be 15. And how do we come up with that? How many mills they equalize? We don't ask them. We don't say, how many mills did you tax yourself this year? We calculate what's called effective mills. In fairness, not everybody collects what's on paper. And so we want to say, if it's local effort, if you're not collecting it, you're not doing it. It's not the local effort. So the statutorily, the way we do it is we say, how much revenue did you really bring in, and what is the value of your property? So the revenue brought in, I'm going to show you, is actually going to include pilot revenue, which is going to increase the effective mills. And then the adjustment to the denominator, which would be the tax digest, is also lower because the exemption is not included. So the effective mills is the key, I would suggest, to how the exemption comes into the equalization formula. Because the denominator, the 40% adjusted tax digest, that is in fact lower because pilot value, the value of that property, which is the fees or whatever the term, that in the leasehold arrangement owned by government, it's exempt and it's not in there. And therefore, the effective mills is higher, and the effective mills is what we equalize. And on slide 10, all we're saying is that impact aid and pilot are both part of what we consider, but it's not what we subtract. It's already out of the digest when the Department of Audits and Accounts sends it to us.
But the pilot revenue, is it counted as tax revenue?
Yes, sir. And here I'm talking.
What they receive?
Well, if I may, I'd like to come right to that, but there's another. I'm really addressing here that denominator. The denominator is the tax digest. So the point here is that the tax digest, the exemption, what's the value of their property? The exemption for the pilot property, and that's what I'm calling it, is included because it's subtracted by the Department of Audit or Revenue before we get it. The same is the case with impact aid. It's not in the value of the property. So the denominator of that calculation is impacted. And the next point is what you're raising, is revenue. Both pilots and impact aid are similar in that while the values are subtracted from the property digests, the revenues are also, we also do consider the revenues. The revenues are reported to us in the Department of Revenue, so we actually do include, specifically to your question, the answer, we do include pilot revenue as tax revenue. So on that earlier slide where we were saying, how do you calculate effective mills, it is tax revenue as the numerator over tax digest. That numerator, tax revenue, it's the taxes that you collect, on the next page, it's the taxes that you collect. On page 12, if we're talking about what it is, it would be the taxes that you collect, it would be pilot revenue, which is payment in lieu of taxes. It would be, well, you can read the list on page 12. The point is, yes, sir, they are considered tax revenue. Pilot is considered tax revenue. Impact aid is considered tax revenue for the purposes of calculating effective mills in equalization.
But it has to be
Not exactly. Bullet point 3 down below, other tax revenues. Well, first of all, the answer, I would like to defer the specific answer to the Department of Revenue, but here's what we do know. We didn't actually get a delineation of pilot revenue as such until about 2014, and I think it was really this review where we were looking more closely. We as a state were looking more closely. In the past, those pilot revenues, we understand, have been included in a category called other. And because the pilot revenues are relatively inconsistent in how they're structured, I would suggest that I wouldn't suggest to you that the pilot number that we get from the Department of Revenue is perfect. There are probably scenarios where some of the pilot revenue is still up there in other. But I would defer to the Department of Revenue for any further analysis of exactly what is considered other revenue. I'm raising the point simply that the pilot revenue comes into the calculation for equalization as revenue, as tax revenue, which increases the effective mills, and that the value of the property has been subtracted from the tax digest, so it also impacts the denominator. Impact aid is the same arrangement, except it's federal property, federal government property, it is exempt from the digest, and it's a general exemption. And the federal government does pay, the federal government pays money, impact aid, in lieu of the property tax that the districts would have received had the governmental property been taxable. This next page, page 14, and also I guess the bullet point on page 13, and we just put this together as just something order of magnitude, but not something that we stand like without doing a little bit more analysis. But just generally speaking, the impact aid revenue, if we just looked at what is the value of impact aid revenue meaning income or revenue over the denominator to calculate effective mills. Well, the impact aid was $20 million a year. The cost to the state, when I say cost, I don't mean that in a bad way. I'm just saying the state ended up, the state funded $3 million more in equalization because we were able to include impact aid as revenue. And we would suggest that's appropriate because impact aid is in fact intended to be in lieu of property revenue, property taxes that you didn't get because the federal government owns the property. But that is just to put it in some context. Similarly, on page 15, we did the same analysis and said, roughly speaking, for fiscal year 15, what was the impact of the revenue from pilot that was reported to us on equalization? Again, we're just talking about the revenue piece, the numerator, not the denominator. And it was about $436,000. Again, it's payment in lieu of taxes, so we're not suggesting this is some kind of cost that should be eliminated. It's simply a point that this is the value of the payments that are being made to the school district. I think ultimately, Mr. Chairman, just to end on that, again, it's just, we did that to show that it is possible to calculate what the impact would be of a lot of these arrangements. And it's not just pilot. It could be a local abatement. It can be impact aid. It could be what happens if the military base closes, or what happens if the military moves in. We can help school districts to communicate with their tax commissioners and whoever else to make sure on the front end as they're doing the analysis that everybody is clear on what the costs will be, and also then through the process as these arrangements, whatever they might be, are approved, that the school districts, and we can help the school districts, are involved in making sure that the reporting is accurate. Oftentimes it is, sometimes it's not. The more people and the more informed eyes that are looking at the numbers as they're moving through the process, I think the more valuable, the better the number would be.
Question on page 15. I'll make sure I understand how you exactly what you said in 15 is the pilot revenue to the qualifying districts added $436,000 in the state equalization grant funds. So go back through the formula.
Yes.
Are you saying that if you took out on the formula?
If you're at 16, if I may, I don't know if this might answer your question. If not, I can tell you the formula. You might be asking a deeper question. Firstly, you can see how we derived the 436. All we did was we said if we didn't include that pilot revenue in the revenue that is the numerator of how we calculate
that's where I'm going.
Yes, sir. So we said we're not going to include the pilot revenue in the numerator of how we calculate effective mills. How would that change the equalization amount?
So it was a total of about $436,000.
Yes, sir. And
for the whole state.
We put estimated because we're not intending to change policy. We're only pointing that out.
Well, is that, let me ask you, 436, is that just for the county shown? Or is that?
Those are the only counties that received and reported pilot revenue.
Okay.
So all of the counties that were relevant to this calculation, there's nobody else was relevant.
Okay.
I will point out, is truth not on that? Right. Some districts are not reporting pilot. Mr. Chairman, this just gets back to your point. I'm not sure if they know. That's right. There are districts that are not reporting pilot. Now, I actually don't know if that's, I don't know why.
For example,
And I think it's because they just don't have it, or maybe they're not getting it. Is that why? Because they're not equalized. If they're not receiving equalization, they wouldn't be on this chart. But there are more districts receiving equalization than on this chart. So, again, my only point is, that's why we put estimate. I wouldn't suggest we know exactly what the pilot revenue is. I'm just saying that it is included in the revenue considered.
Scott, so there's also an impact from the denominator being different too, but you really don't know what that is. That visibility is way before you ever see it. You know what I'm saying?
Yes, sir, you are correct, and that is, remember the numerator denominator, this 436,000, that probably pales in comparison to what the value would be if we, and we don't know it, if we knew what the value, or True County, what was it, $1 billion, I guess? The Kia plant was $1 billion. When that $1 billion didn't get reported, we didn't know it was $1 billion. That's right. I'll put it that way. Right? The equalization value was about 1.7 million, so roughly. So $1 billion, 1.7 million. That change alone is much larger than what you're seeing here. Now that's $1 billion.
Yeah, my point is the pilot impact is a lot bigger than the 400,000 you're seeing from the numerator. The denominator is going to make bigger impacts.
Yes, it is, and we again appreciate you pointing that out. We don't have the information to be able to do that. I will also suggest the Department of Audit's report that came out that I think we've all been referencing in, I guess it was January 8th of 2013. They actually put together a model to try and come up with that question, which is one of the reasons we didn't try and do it here. They did a great job. But they came up with a model to try and get to that question of what would happen to equalization and local fair share if we were able, if the state was able to analyze either adding it back in or adding it back in, what would the cost be?
So what was that?
Well, what they were trying to do, I think they actually looked at the sampling. I think to be technical, I think they were looking at the percentage was $1 to $1. I think their point was that it was 5%, but I don't know that it was 5% of the value of all the property tax digest. I think they were trying to show that there was the change was different from 5%. So if you change the value 5%, the impact, that's what it was. I'll get you their number if they have it, because they did a sampling. But what they were showing was that it's not a dollar for dollar impact. So the question from the Senate was, what is the impact? So if you have piloting, we're adjusting property. How do we figure out, I think, typically what you were referencing, how do we know whether the school district is going to get enough money ultimately, or is it dollar for dollar reduction increase? And their answer was no, it's not quite. It's not obviously dollar for dollar. And it got very complicated because in the year that they were looking at it, sorry for detail, but in the year that they looked at it, local fair share was capped at 20%, we were prorating, so it was a little harder. It was a little harder to do it, it was much more complicated, but their point was it was not dollar for dollar. John, is there a dollar value of the equalize? I think I prefer, if I may, we could work with the Department of Audit and perhaps we'll come up with that list. We'll do the same analysis and we'll see if we can get a notional value and we'll try and add it back in and we'll give it to you. I would suggest it's going to be higher than this.
Scott, in the scenario, if a district misclassified revenue and they called it other income rather than tying it to any kind of tax, like it would come in from a request or whatever, if it just came in as other income rather than a tax revenue, wouldn't it in effect have would it not have the effect if they were in equalization? It would increase the amount of equalization that they receive from the state, and it would decrease their liability for local 5 mil share. Isn't that correct?
Well, actually, if I may, two corrections to that. Firstly, local fair share is not impacted by revenue, and that's why I did local fair share first. Local fair share is only impacted by the value of the property tax digest. So when we're talking about local fair share, the revenue is irrelevant. That's why I did local fair share first, and I made a big point of saying effective mills, numerator over the denominator. They're very different. Local fair share, the calculation is easier. It's really what is the value of the property tax digest. The higher the digest, the higher the value of 5 mills, the higher the subtraction that we take before we send in the state dollars. And then the second point would be, as it relates to equalization, I think it's actually different. If the district does not properly report their revenue, that is, if they underreport revenue, or if they report revenue that should be considered tax revenue for the purposes of calculating equalization, would you go to that slide where it has the numerator, the effective mills. I don't know, I think mathematically helps me to think of, it's the tax revenue. And so if their revenue up there, tax revenue, in your scenario, I think you said they might have misreported the revenue and didn't say it was a tax revenue. Or maybe that wasn't what you said. Let me use that as an example. If the district, the commission district, whatever it is, fails to report a revenue as a tax revenue that we would capture in the calculation of effective mills, their revenue would be lower. Therefore, their effective mills would be lower, and therefore they would get less money in equalization. And that would be a scenario where you probably hear from them. They come to just, and you tend to hear from districts when they've been underfunded because they made a mistake or somebody made a mistake. So if they had failed to report the tax revenue, and I think this is probably what you're thinking intuitively, if they fail to report the tax revenue properly, they're going to get less equalization, and they're probably going to be coming for an adjustment, or would think to come for an adjustment. If it were the other way around, if for whatever reason the state misclassified the tax revenue or overstated, well then it would be the other way around, because it's the effective mills. The higher the effective mills, the more we are equalizing. I'm sorry for that.
I can't, my mind must not be a language enough. I don't have it around this concept, but I understood it. I'll follow up.
Yes, sir. But from a policy perspective, we're agreeing, and that is that I think we could all work, and Department of Education could work with Department of Law and Department of Revenue to make sure all the tax commission, that everybody understands the impact. Because I think your point is well taken, which is if the tax commissioners, or whomever it is that are reporting these revenues, if they misreport it, they may not realize that it has a downstream impact on equalization. And the school district probably has very little insight into whether or not it was properly reported in the revenue when it went from the tax commissioner into the Department of Revenue. So again, getting in a perfect world, having everybody at the table, you've got some very sophisticated places like Gwinnett County, Rick Cost. He probably is already involved. He would already have his estimate. He'd probably say that looks wrong, and he'd call around. In a perfect world, we'd all have everybody at the table understanding what the revenue would be. And so what they would do is they would make sure that all the revenue that was earned was actually reported properly.
Scott?
I don't understand all that, but I do have, the way you calculate, I do have 2 of the 3 wealthiest counties in the state in my district. And I'd just like for you to come up there and explain this formula to them.
No, they are probably not being equalized, so it's easier. It would be the local fair share.
Yeah, but the way I understand that, that's because they have small school systems and a meal's worth a lot of money, right? See, I understand that much. I'll work on the rest of it.
Yes, sir.
Just to be clear, what's interesting about coming through this is that if a local jurisdiction does a pilot project, the state in their equalization county, the state will end up giving them more money, is what it boils down to. Because the pilot comes down the denominator, the revenue goes into the numerator, and so it could actually make the state end up paying more money for equalization depending on the particular cases.
That's correct.
Yeah.
Thank you very much. Any discussion from the committee? My plan is to have our staff, both the House and Senate staff, working together to kind of congeal all this into maybe some possible options. And what I would hope that the members would do would be to communicate with your staff and give them your input and maybe get a feel as to where they're headed and to see if you agree with that. And then we will try to share that information with you offline and look to, I don't know that we've set another date or not yet, but we'll set another date once we feel like we've got something to put on the table to discuss further. And I don't look to us having more than 1, maybe possibly 2 more meetings. And we're gonna come to some conclusions, and whether it be policy or whether it be, just something that we decide, or whether it requires legislation, we'll certainly try to come up with something that will continue to try to clarify the process and make it fair and equitable to everybody. I think that's our ultimate goal. With that, thank you very much for your attention.